In 2023, Warren Buffett shares his wisdom on investing and reminds us that stocks sell at silly prices from time to time. To act on these opportunities, you don't need a high IQ, but a temperament that's willing to step up and make a move. As a long-term investor, you should feel excited when the market is down, as it provides a sale on stocks, and you have the opportunity to buy low and build wealth over time. So let's take the advice of the Oracle of Omaha and seize these opportunities in the market. Don't miss out on this chance to invest in your future. Take a listen to these two insightful clips. First off, Warren Buffett emphasizes that if you get too upset with price fluctuations, you should not own stocks at all. Corrections in the market are a normal part of investing and should not be feared, but instead should make you happy as they provide opportunities to buy great businesses at discounted prices. Secondly, in times of high inflation, Buffett advises that improving your own earning power is the best investment against inflation. In his 1981 shareholder letter, Buffett emphasized the importance of owning businesses that have the ability to combat inflation. He outlined two key characteristics of such businesses. Firstly, they should be able to increase prices without losing market share or unit volume, even when demand is flat and capacity isn't fully utilized. Secondly, they should be scalable and capable of accommodating large dollar volume increases without significant additional investment. In simpler terms, the company should have a competitive advantage or a moat that gives them pricing power, making it easier for them to raise prices without losing customers. This can take many forms, such as brand loyalty, patents, or other types of barriers to entry. Whenever you pay a toll, you are dealing with a company that has a competitive advantage or a moat, as per Buffett. Companies like Coca-Cola, Apple, and Louis Vuitton have powerful brands that provide them with moats. Costco has built its moat around offering the best prices. Companies can gain a competitive advantage in several ways, and if it grants them pricing power, they are the best bets to emerge victorious during inflation. When inflation raises their costs and lowers profits, these companies can raise their product prices, and their moats should protect them from sales drops. In fact, Coca-Cola's sales rose last year as they raised their prices, providing evidence of their success. This is how to handle inflation in investing in 2023. Finally, we must also discuss the third significant investing challenge of this year: interest rates, and how to navigate them, as Buffett explains. Buffett has compared rising interest rates to gravity, stating that they affect the value of assets in the same way that gravity affects matter. When interest rates are low, borrowing money becomes cheap and easy for consumers and businesses, leading to increased spending, profits, and growth. However, when interest rates rise, borrowing becomes more expensive, making it harder for businesses to pay off debts and for consumers to spend. This typically results in poor financial results for businesses and a drop in stock prices. Rising interest rates make government bonds more attractive to investors seeking low-risk returns, which can cause professional money managers to move out of the stock market and into treasury bills, causing stock prices to fall. As investors, we must remain focused on the long-term performance of our selected businesses and use the opportunities presented by depressed stock prices to generate long-term returns. While history has shown that stocks generally outperform bonds over the long term, short-term fluctuations can occur, and we must remain focused on the long term to navigate these fluctuations successfully. Warren Buffett's insights provide valuable guidance on how to tackle the three major challenges that investors will face in 2023: a stock market correction, high inflation, and rising interest rates. His advice is to focus on the long term and invest in high-quality businesses that have the potential to overcome these challenges. During a stock market correction, Buffett advises investors to remain calm and not get carried away by short-term price fluctuations. He emphasizes the importance of investing in great businesses that are likely to perform well in the long run, rather than focusing on short-term market trends. By investing in companies with strong competitive advantages or moats, investors can stay invested for the long term and avoid getting caught up in market volatility. High inflation is another challenge that investors will face in 2023, as prices rise across the board, making everything more expensive for both consumers and businesses. Buffett's advice is to improve one's own earning power by making oneself more valuable to one's employer or potential future employers. He also recommends investing in businesses that have the ability to increase prices without losing market share or unit volume. By focusing on companies that have a competitive advantage or a moat, investors can nullify the effects of inflation and maintain purchasing power. Rising interest rates pose yet another challenge for investors. Buffett likens interest rates to gravity. Just as gravity affects matter, rising interest rates affect the value of assets. When interest rates are low, money is cheap and easy to access, resulting in more spending, profits, and growth. On the other hand, when rates rise, borrowed money becomes more expensive to access, making it harder for businesses to operate and thrive. Buffett advises investors to remain focused on their selected business's performance and stay focused on the long term. By focusing on high-quality businesses and buying them at great prices while interest rates are high, investors can use the depressed stock prices as opportunities for long-term returns. In conclusion, Warren Buffett's insights provide a valuable framework for tackling the three big investing issues of 2023: stock market corrections, high inflation, and rising interest rates. By focusing on high-quality businesses with strong competitive advantages, investors can weather these challenges and achieve long-term investment success. As Buffett advises, let's play the long game and invest wisely, staying focused on the long term to achieve our investment goals.